Okay, folks, we are live. Hi, everyone. Really good day to be here. My name is Alyssa. I'm part of the Surge team. Today, I'm joined with Rajan Anandan, Managing Director at Sequoia Capital India and Surge. Rajan is very experienced, having led Google India in the past, and now he's a part of the Surge team. And as usual, we're very excited to answer your questions. We have hundreds and hundreds of your questions to go through, so super excited. Super excited. Now I'm bringing it over to you, Rajan.
Great. Thanks, Alicia. Hi, everyone. Good evening to all of you. It's 4 p.m. in India. It's 6:30 in Singapore. And then depending on where you're dialing in, it's probably sometime between 4 p.m. and 6:30 p.m. Thank you for giving us an hour of your time. It's great to see quite a number of you who've joined us today. So we started this Surge Decoded series because we got lots of questions from founders as to what is Surge, how do I get in, what do we look for, what is it really about, what value can we get out of it, and many, many other questions. So we started this series some time ago, and we wanted to continue it so that we can answer questions that all of you have had. So that's what we'll do. It's entirely sort of my trying to answer questions that all of you have raised. Alicia will ask those questions and I'll try to answer them. But before we get into that, we thought, what we should do is try to get a better sense of all of you all of you founders who've actually dialed into this. So what we'd like to do is we're going to do a couple of polls. What we'd like you to do is we're going to use a tool called AHA Slides. And the way to actually use AHA Slides is if you can just take out your phone and scan this QR code, and you'll be taken to AHA Slides S Decoded. So if you all can do that, please take a minute to do that. And then I'm going to just ask a couple of quick questions, and then we'll see the answers to those, and we'll keep going. All right, so hopefully you've done that. Now let's go to the first question. Okay, so the first question is, where are you coming from? Specify the city and country. So you could say Bangalore in India, you could say Jakarta, Indonesia, you could say Manila in the Philippines, you could say Singapore in Singapore, or Ho Chi Minh City in Vietnam, or Dhaka in Bangladesh. Please sort of write that down.
Yep. And if you guys.
Okay, so I think can we go back and show the code, Gina? I think somebody, yeah, there we go, guys. So for those of you that just joined, oh yeah, we've had about quite a number of you joined in the last 2 minutes. So please do, we are using a tool called AHA Slides. So if you can open up your phone and
it's ahaslide.com. Yeah. You can either scan the QR code or you can go to ahaslides.com/sdecoded. Both will work. All right. Seeing more and more of you in the platform. That's great.
Do we have enough, Alicia, or do we want to get more?
I think let's move on to the next. And if for those of you who are not able, just join. You can also join via the URL. ahaslides.com/sdecoded and copy paste that. So you can also use that as well. All right. Wow, look at that. Look at all the incoming. There's like 88 responses so far. Gina, can we open the response? Oh, go back and click open.
Open at the bottom, Gina.
Yeah. It's just to make sure that. Oh, look at that.
That's cool.
Lots from India. I see Medan. I see Jakarta, Pune, Mumbai, Chandigarh, Hyderabad, East Java. Wow, this is amazing.
Cool. All right, let's keep going. That's good. Let's go to the next question. Okay. Oops.
All right. Next question is, which sectors are your company operating in? So
Yeah, why don't you guys, I think we should get more responses here. If you all can answer.
okay. Okay. Rajan, there's a lot of SaaS companies today. Education,
SaaS,
health.
healthcare, lots of ed tech, ad delivery, that's good. Mobility services, that's good. We have a very good representation of companies from across sectors. That's good. Let's go to the next question. Which stage is your startup currently in? Idea stage, you've got a prototype or beta, or you've launched? Okay, we have a good mix. Little less than a quarter of our companies are at idea stage. Almost 40% have a prototype or a beta, and a good third of the companies have launched. That's great. All right, cool. Let's go to the next one. Have you raised funding yet? Yes, from an institutional investor. Yes, from angels or family and friends, and no.
Okay. I think the large majority are still bootstrapped. Good bunch of angels and family and friends as well.
Yeah. Okay, so I guess there's only one or two of you, very few of you that have raised from institutionals. Most have not raised. That's great. Have you applied to Surge? Yes or no? Okay, there's a few more of you that haven't answered. Please say yes or no. Have you applied to Surge or not? This is not a tricky question. All right, terrific. So we've got about 40% of you that have applied to Surge. So I think you'll have lots of very, very good questions. And then 60% of you that haven't applied to Surge, but I'm assuming the reason you're here is you're thinking about whether you should apply to Surge or not. So thank you very much. Thank you, founders, for walking us through that. I think that gives us a pretty good feel for where you're from, what kind of sectors you're in, where you're on your fundraising journey, and also whether you've applied to Surge or not. All right, with that, Alicia, let's get into the questions.
All right. The first question today is around like, what are the top 3 red flags that made you reject what otherwise might look like a great investment opportunity?
Yeah, I think well, firstly, keep in mind, everyone, that we have several thousand startups that apply to Surge, and then we are able to partner with a few dozen of them in every cohort, right? So just because you're not able to get into Surge doesn't mean you can't still end up building a very, very interesting company. But in terms of red flags, I would say, look, it goes back to what do we look for, right? And we've talked about this a lot. And if you haven't been to these sessions before, and those of you that are seriously thinking about applying, I'd encourage you all to watch some of the previous sessions that we've had on Surge Decoded. Firstly, we look for very strong founder market fit. So we're trying to assess whether is there what's the reason for this founding team's right to win in this market. We've shared lots of examples of that. For instance, if you look at Pen Tester Academy, which was in our third cohort of Surge, Vivek is one of the world's foremost experts on cybersecurity, and he's been providing sort of online courses and certifications in for pen testers for a period of time, and then he came to us earlier this year and was very keen to launch a company around that instead of just being an online educator. And we felt that there were very few people in the world that were more knowledgeable about that particular space than Vivek, and he had also been he had been doing some very, very interesting things on that space. So founder market fit, right? Asking yourself this genuine question of what's the right for this team, whether it's a single co-founder or two co-founders or three co-founders, what's the right for this team to win in this market, right? Is this the first thing. So just because edtech is hot, or just because digital health is hot, it doesn't mean that you as an entrepreneur that has no experience in that sector could build a business. You might still be able to do it, but that's sort of something that we look at. I think second, we look at the size of the market. I think there are a lot of ideas that we think don't really fit into Surge because we don't think that they can become billion-dollar businesses. So we are trying to assess whether a company can be worth $1 billion, not immediately, not in 2 or 3 years, but let's say 6, 7, 8, 9, 10 years from now. Can it become a billion-dollar company or not? And a lot of that is really tied to the what we call the addressable market, right? Is the addressable market large enough? Do we think that this is the kind of space where you could build a very large company? So a lot of companies that we see at Surge, we do think they'll become very interesting businesses. So I see that quite a number of you are from India. So you might be able to build a company that is, let's say, 100, 200, maybe even 300 crores of revenue, and that is quite profitable, and you'll make a very, very good living as entrepreneurs, and you'll become a very successful entrepreneur and founders, but you may not become a $1 billion company, right? So in India, that's 7,000 crores, 7,500 crores of valuation, because you may just not get there, right? So if you're building a SaaS company, for instance, we have to see a path, and you have to basically demonstrate that you see a path to get to $100 million ARR, right? Without being able to demonstrate that you can get to $100 million ARR. Again, not in 1 or 2 years, but in 7, 8, 9, 10 years, you're not going to be a $1 billion company, right? So I think that's the second thing that we look for, and that's sort of one where we see a lot of companies saying, look, that's it's hard to see how this company gets to that stage. And now, if the company has already launched, and we see a lot of companies that apply to Surge that have already launched, it could be with a prototype product, it could be that they've actually launched and got a bunch of traction. We actually look for customer love, and I'd say this is probably the area where a lot of companies, and by the way, we don't look for product. It's highly unlikely that you're going to have already established product market fit, but we are looking for early signs of customer love, which is the first thing that you need to get to product market fit. So for instance, if you've launched a consumer internet app, right, could be a gaming app, it could be in digital health, could be in online education. We look at, for instance, retention, right? We look at retention cohorts to see, what is your month 1 retention, month 2 retention, month 3 retention. We would look at time spent. We'd look at, Play Store ratings. If you're building a D2C brand and you're selling on Amazon, we look at Amazon ratings. We look at what customers sort of have to say. If you're building a D2C brand, you're selling it on your own website. We look at again, cohorts, right? Repeat purchase, things like that. So I'd say that's sort of customer love. So those are really the things that we look for, right, at a simplistic level. And if we've decided that maybe we don't, this is not the right time for Surge to be partnering with you, it could be one or more of those reasons, right? Founder market fit is not very clear. We don't think the market's large enough to build a very large business, or we think the market is way too competitive and it's not clear what your point of differentiation is. Or, you've launched a product, but, there really aren't early signs of, customer excitement, right? If you're a B2B, by the way, so if you're, for instance, a B2B customer, right? Let's say you're building a SMB SaaS product, we would look at churn, right? And to say, like, what's your churn rate within your SMB customer base? Or if you're building a large enterprise customer, we look at sort of, okay, how much are these customers paying, and do we think that you could get X number of customers to be able to pay you, so that you can actually get to build a multi-$100 million revenue company 7, 8, 9, 10 years from now. So it's a long answer to your question. It's not one simple reason, but these are the kinds of things that we look at.
Great. I think another question that people have is, can we concurrently be in another program, for example, like Y Combinator, and receive investment for Surge? Has any other startups done this in the past?
Yeah, no, absolutely, right. So we, if you look at Katabook, was in our first Surge cohort. Katabook was an alumnus of Y Combinator, right? We've had several companies that have gone to Y Combinator and then joined Surge. We have companies like, we've had companies from Antler. We've had companies come to get into Surge after they've attended other programs like Y Combinator, Antler, Entrepreneur First, etc. But we also have companies that come straight to Surge, right? So actually, in our next Surge cohort that we're going to announce in a couple of weeks from now, 6 of the companies that we invested in were pre-launch. I mean, they were basically very strong teams with very strong ideas of what they wanted to build, and sort of they had started their product development, but they hadn't launched. So obviously, they hadn't been to any other programs. So, but long answer to your question is it's perfectly fine if you think you will benefit from Surge, then even if you've been to other programs, that doesn't really matter to us, right? What matters to us is these 3 things we talked about, right? Very strong founder market fit, very large markets that you're going after, and also being able to demonstrate that you're going to build something very, very differentiated. And then finally, if you've launched, we're looking for early signs of customer love or user love.
Great. I think a lot of because a lot of for the benefit of those who haven't applied to Surge yet, I think a lot of people are asking, what happens if I'm still in ideation stage? Then what is Surge looking for? What should they put in their application?
Yeah. I think the thing. So firstly, you should tell us what your background is, what you've been doing, and why is it that you are the right team, let's say founding team, right? It could be a single founder, could be 2 or 3 founders. Why are you the right team to build this business, right? It's the example that I just mentioned, right? EdTech is very, very hot, but if you've spent the last 5 or 6 years, let's say in a horizontal e-commerce company, and nobody on your founding team actually has experience in the EdTech space, or the pedagogy, or real experience, right? Why would it be, so trying to explain that, right? So I'll give you another interesting example of very strong founder market fit. So we partnered with Chili Belly before they had launched. Chili Belly was in our second cohort of Surge. They're doing social fresh e-commerce in Indonesia. Some of you that are dialing in from Indonesia may have heard of Chili Belly. But all 3 co-founders of Chili Belly had extensive experience in e-commerce, right? One of them had worked for Alibaba, 2 of them had worked for Lazada, one of them had been an e-commerce entrepreneur, and they all knew Indonesia very, very deeply. But they were launching something that was a fresh new idea, right? A fresh commerce, sort of social commerce, had not happened in Indonesia yet, at least not in the way that these guys were planning to do it. But this was a team that deeply understood e-commerce. And the leap of faith that we had to make was that we felt that the time was right to build a Chili Belly like company in Indonesia. So that was one, right? Articulating why you are sort of very well positioned to actually build this idea. And then secondly, you should describe the market, the specific customer pain points, why you think this is a real pain for customers, be they consumers or businesses, and also describe in a lot of detail, like what is the product that you're planning to launch, right? And then you need to also in the application describe, why is this going to be a very large business, right? What is the math where, not now, but 7, 8, 9, 10 years from now, this could become $1 billion company. And so you don't need to have launch, but you need to be able to articulate these points to a level of precision that is quite precise. Now, by the way, what will happen is you'll end up building a product, you'll end up launching it, you'll end up iterating, you'll end up morphing, and the business, eventually the business that you will build will likely be quite different to what you're going to articulate. But we want to see that very clear articulation. So what I would say is, look, if you're thinking about leaving your company that you're in today, and you're thinking of, and you're brainstorming ideas, that's probably not the time to apply to Surge, right? Because if you're at brainstorming stage and you don't really know exactly what you're going to build, that's probably not the time to apply to Surge. But if you're very clear on what you want to build, and let's say, for instance, you're going to build, do something in digital health, you've interviewed, 300 potential customers, you've got very, very deep insights of what the pain points of those customers are, you've got a pretty clear idea of the product you want to build, and if you're a product manager, you've written up your MRD, that's a good sign, right? That you've actually done a lot of research about the users that you want to target, the problem that you want to solve, and the kind of product that you want to build. And let's say your co-founders have, you're an engineer, you've got a product manager, and you've got a designer. 2 of the 3 of you have a lot of experience in digital health. Now you're talking. The Surge team is probably going to get pretty excited about you. So that sort of is how I would like to describe, I think, what you should articulate in the Surge application.
Great. So I think there's a couple of questions both in the chat Q&A, as well as from collecting questions around edutech. Why is this edutech investment thesis at a peak? One. And number two is what are we looking for in terms of like edutech companies?
Yeah, that's a great question. Look, I think online education really, if you look at different. By the way, online education is at different points because I do know we have founders from Indonesia, India, but we also have a few founders from other parts of Southeast Asia as well, right? So if you look at sort of India edutech now is sort of getting to scale, right? We have over 100 million Indians that consume online education products. We have over 6 million Indians that actually pay for online education products. And that's why you have companies like Byju's that now have $800 million of revenue and valued at over $10 billion. Indonesia, I would say, is probably 3-4 years behind where India is today when it comes to adoption of online education products, right? So you have companies like Ruang Guru. We have a company called Kolan that was in our last cohort of Surge. But then if you go to Vietnam, it's probably again like 4 or 5 years behind where India was. But then you look at countries like Philippines, Thailand, Malaysia. I think we think it's very very nascent, right, for edutech. Why? So again, right, the time is now because look, in many countries, a large percentage of the population is online, and over the last 5-6 months, most schools have been shut, right? I mean, I think almost all schools. Singapore is probably the exception where children are now going back to school, but in many countries, schools are still shut, and so therefore, parents, students, and teachers have actually gotten used to. So teachers have gotten used to teaching online. Students have got used to having online education, and parents understand that this is sort of something that works because they've now seen it work for the last 5, 6, 7 months, depending on the country that you're in, right? So it's a combination of reasons. One of the questions we like to see you answer is why now, right? Why is the right time for this kind of business to be built in your country or in the world right now? And there's a very strong why now for edutech, right? It's COVID because offline schools are shut, offline testing centers are shut, offline extracurricular centers are shut, right? So online is sort of the only way to do it. Now, in terms of what we look for, I would say, look, the answer really depends by country. As I said, in India, we think there's a lot of companies now in edtech, right? And as Sequoia, we are investors in Byju's, we are investors in Unacademy, we are investors in K12. Just within the Surge portfolio, we have a whole set of companies like Doubtnut, Scalar Academy, and so on. Talked about Kolan in Indonesia. Actually, in our upcoming Surge cohort, which we'll announce in a couple of weeks, we have two very exciting edtech companies, right? So, one thing you should do is, probably take a look at the Surge portfolio. If you go to the surgeahead.com website, you'll see the kind of companies that we partnered with in the edtech space, both in India as well as in Indonesia. And then also you can look at the Sequoia companies, so you'll get a better sense for the kinds of companies that we've invested in in the broader sort of edtech space, right? So, but I would say, look, if you're building something that is quite differentiated, if you're an Indian edtech startup at this stage, I think for Surge to get excited about the company that you're building, it has to be truly differentiated, right? You have unique insights about what customers need. So you'll see this when we announce the next cohort, right? The two companies that we have. Actually, one of them is probably still going to be in stealth, so you may not be able to figure out exactly what they're doing, but they're doing something really, really unique. The other one, when we announce, you'll know what it is. But it's going after a different segment, right? I would say in India, if you're building an edtech company that is globally focused, India to the world edtech company, that we think is very, very interesting. We think that Weightage Junior was the fastest 0 to 100 million revenue startup that has been built in India's history, which is quite amazing, right? This is teaching coding to kids, but a lot of the revenues that Weightage Junior had actually came from outside of India, right? So if you're building a India to the world edtech company, that's pretty interesting. But if you're in Indonesia or Vietnam or Philippines or Thailand, we think there's just tremendous amounts of white space, right, to do lots and lots of different things. Because as I said, we think most countries are probably maybe 4 or 5 years where India was 4 or 5 years ago. So as a result, there's like for instance, Kolan is, initial product is really a doubt clearing app, right? And that's a product that was built by Doubtnut 2 years ago. So hopefully that gives you some sense of edtech. Long answer on edtech, but we are pretty excited about edtech. And those of you that are building edtech companies, we'd love to hear from you. But make sure you're doing something differentiated, right? You don't want to be the fifth company like Byju's. I mean, that company is not terribly interesting, right? But if you're doing something very different that is deeply insightful, we've got lots and lots of insights into what consumers really want, then I think it's very interesting. We'd love to see edtech companies from Thailand. We'd love to see edtech companies from Vietnam. We'd love to see edtech companies from Malaysia. So we actually talked to a very interesting edtech company from Bangladesh, which we're quite, we're working with them. We wanted them to go work on a few things, but hopefully we'll be in the next couple of cohorts, we'll be able to partner with them as well.
Yeah, Rajan, I think like talking about differentiation, somebody asked, how is Surge differentiated from what other startup programs are offering? What is the unique selling point of Surge? So this is the question reversed to us.
Yeah, no, I think, look, first of all, look, as founders, you should figure out what is it that you really need to build your company, right? If you look at Surge, and maybe I can answer this by saying, why did we launch Surge, right? We launched Surge 18 months ago. We launched Surge because we felt that despite all the progress that the startup ecosystem in India and Southeast Asia has made, right? We had, if you go back 10 years ago, there were less than a few thousand startups. Today, we have 40,000 startups in India. We have 27,000 startups in Southeast Asia. There was virtually no venture capital funding in Southeast Asia even 5 years ago. Now we have, last year there was $7 or $8 billion of venture capital funding. So despite all the progress that has been made, we saw that there were several challenges, right? First, it was very difficult to raise enough capital as a seed stage company to be able to focus on company building and get to Series A. So as a result, we saw large number of companies were raising 2-3 rounds of financing before they could get to Series A, right? So they'll raise $100,000 or $200,000, then they'll have to raise $400,000-$500,000, and they have to raise another round before they get to a Series A round of 7 or 8 million. As a result, it was taking a long time. One of the co-founders, all they did was fundraising, and they were not focused on what they should be doing, which is building their company, right? And also we found that founders were diluted a lot before they got to actually Series A. So that was one issue. Second is the kind of mentoring and perspectives that founders should be getting very early in their journeys, especially around what are all the design choices you should be making, that'll help you become an enduring company. By the way, most of the important decisions you're going to make as a company will be made in the first year after formation, right? What is the kind of product you want to build? What is the kind of team that you want to build? What's the kind of growth strategy that you want to drive? If you're a revenue first company, what's the kind of business model? These are all decisions you're going to make in your first 12 to 18 months. And we felt that the ecosystem really was not at a level where you could get the kind of advice, mentoring that you needed on that, right? So that's number two. Third, we felt that companies really weren't focusing on doing the right things, right? Are you hiring the right kind of team? Are you building the right kind of team? And now, first of all, by the way, if you don't have enough capital, you can't hire the kind of team that you want, right? So we launched Surge to try to, address all of these constraints. So as a result, in Surge, you will get $1 to $2 million from Surge, right? So it's not $100,000 or $200,000 or $300,000. So if you get into Surge, you get $1 to $2 million upfront. What that enables you to do is it helps you focus on company building, right? For 12 months, for 18 months, some founders will go 2 or 3 years with the capital that they've raised. And you don't have to worry as much about the next fundraise or the next fundraise. So that's the first thing, right? Second, we really it's a 14-week program where we go very, very deep on the most important topics that are, that really relate to building an enduring company, right? It could be, look, how do you get to product market fit and how do you build amazing products, right? That's a very, very tricky question, by the way. I don't know how many, very, very few startups get to real product market fit, which is why very, very few startups become great companies, right? Because at the end of the day, as a seed stage company, you have one priority, which is to get to product market fit. And so we spend a lot of time on, how do you get to product market fit? How do you know when you get to product market fit, right? How do you build product teams? How do you hire first set of engineers, right? I see a lot of startups are from Southeast Asia. Hiring engineers is not easy, right? At Surge, we help you. We don't just tell you how to hire engineers. We actually have a whole capability where we help you hire engineers, right? Hire a head of engineering if you need a head of engineering, hire engineers, etc. Right? How do you think about growth, but capital efficient growth, right? How do you think about which channels you should be leveraging? So we go deep on all of these different topics. So that's sort of the second thing. So think of it as a 14-week founders academy, but very, very applied founders academy, right? The third thing we do is we focus with each startup on 2 or 3 topics that are most important to them. It could be you need to hire an engineering team. It could be we need to get to product market fit. It could be we want to scale our sales, 5 times over the next 5 months, whatever the topics are. And every company, we spend a lot of time trying to understand what are those topics that they want to go deep on. We help with it. And then finally, whenever the company gets ready to raise their next round of financing, we help them raise their next round of financing. So we don't have a demo day. but we have something called Upsurge, where we get 35 to 40 of the top Series A investors in the world, from India, from Southeast Asia, from China, from the US. We get them all. It used to happen in person in Singapore. Now we do it virtually, where every one of our startups gets to meet 25 to 15 to 25 of these investors one-on-one. This time we did it virtually because you can't meet people, for 45 minutes each. And what that helps you do is it helps you significantly shorten the time to raise your Series A, right? So in our first cohort of Surge, which graduated, in July of 2019, so call it 14 months ago, 15 months ago, we had 17 companies. 12 companies have raised Series A, right? In our second cohort of Surge, which actually completed Surge in January, we had 20 companies. About 9 of them have raised Series A already. And our third cohort of Surge, which actually just graduated a month and a half ago, right? We had 15 companies, and several have already raised Series A. So that's the other thing that happened. Just so that you all know, I mean, Surge is a program that's only about 18 months into being now. We have invested about $100 million from Surge into these companies, but these companies have gone on to raise over $300 million in follow-on financings from outside of Surge and Sequoia, right? So that's the last thing, right? So if you look at, so in many ways, Surge is really for those companies that we think can get onto a very, very fast trajectory, right? And also for founders who really want to build for the long term, right? Founders who we really believe can build enduring companies, right? We are hoping that from every cohort, we are going to have several companies where 10 years from now, we're going to look back and say, these are the brands, these are the companies that are the most important companies in our region, in India and Southeast Asia. So it's a very, very long answer. And that's what Surge is about, right? And I think depending on, what you're looking for, right? In your company building journey, Surge may or may not be for you, right? But that's why we actually think that our region should have many more programs, right? It should have many more programs, and we get excited every time we hear about another, either venture fund or set of entrepreneurs launching a program for startups, because we really do believe that as a region in India, in South Asia, in Southeast Asia, we need many more programs like this, because our startups need help in our ecosystem.
That's amazing. All right, Rajan. The next question is, so Rajan, somebody watched our recent video on why was my startup not chosen for Search? And they have a question that around, you made the statement that most seed stage companies don't have product market fit. Can you elaborate more on it? And do you have examples of like companies, let's say at Surge, who has successfully tweaked their business model or changed their business model and achieve product market fit later on?
Yeah, no, absolutely. Look, look, keep in mind, no company when they come into Surge has very clear product market fit, right? Because we believe that if you have absolutely nailed product market fit, then you're ready to be a Series A company, right? So let's take a company like, and we have a variety of companies, right? If you like CoLearn, when CoLearn came into Surge, they were actually an offline center focused education company, right? So they had a bunch of offline centers, and they weren't called CoLearn. They were called IQ Education. So actually, if you live in Indonesia or Jakarta, you may have seen the IQ centers, right? They were IQ offline centers, right? So through the course of Surge, well, two things happened. One, COVID happened, obviously, and second, also the founders Abe and Mark really came to the realization that scaling an offline center business and making it very, very large is just not going to happen. So they decided to completely pivot their business and launch CoLearn, right? So we have several companies that have radically changed the business that that they're in, right? Another company also interestingly in the edutech space was InterviewBit. So when InterviewBit was in our first cohort of Surge, they were actually in interviews. They were a site where candidates went to actually prepare for their interviews so that they can get into companies like Google, Amazon, and Facebook. But actually they completely pivoted their business to become Scalar Academy, which is now think of it as if you want to become a Google quality engineer, you go through a 6-month program where they essentially online, they have a 6-month sort of program where they actually dramatically improve your coding skills, so that now you can actually go and get a job at Google, right, or Facebook or Amazon or what have you. So on the one end, on one spectrum, we have these businesses that completely pivot the kind of business that they're building on, right? Then we have a group of companies that haven't launched yet, right? So if they haven't launched yet, they clearly don't have product market fit. And in fact, in our next cohort, we have 6 companies that when we decided to partner with them, they They hadn't launched yet. They were very clear on what they wanted to launch, but they hadn't launched yet, right? For them, it's really about rapid iteration, right? So we work with those founders to sort of make sure that they're rapidly iterating and they're rapidly, talking to their customers, figuring out what's working, what's not working, really prioritizing the features that they want to build, and so that they can actually get to product market fit. And there are other companies that, have very strong early signs of product market fit. And there, what they need to do is continue to work on, and usually, by the way, I mean, I would say in most digital and digital enabled companies, which is a large majority of the companies that we have in our cohort are digital and digital enabled, right? It could be SaaS companies, edtech companies, digital health companies. It really boils down to retention, right? So Rio TV is a great example. It's sort of the Twitch of India in local languages. And Rio actually, hadn't launched when we decided to partner with them. Then they launched. And really, I would say for the first 5-6 months, we just obsessed about retention, right? How do we get our day 30 retention from X to Y? How do we get our, week 8 retention from Y to Z, right? So it was really about that. And how do we get them to do that, right? And it's a combination of obviously partnering with our experts, us talking about, what does it really take to actually build products that users love, and then getting very, very tactical with these teams on improving their retention. So it's a range of things that we do. It's not one size fits all. Again, look, Surge is what you make of it, right? Once you get into Surge, what we tell all our founders is we have this incredible set of mentors, tools, approaches, frameworks, practical applications of things that you can apply. There is there is a 14-week program that you'll take through. You already have money in your bank, but at the end of the day, what you want to get out of Surge, then after that is entirely up to you. And what we find is, I think most founders, are able to get the most out of it.
Great. I think the next question is around work experience. Does work experience have any influence in the market or industry knowledge of any individual? Can somebody who's only like 21 or still in university apply to Surge?
Yeah, no, absolutely. Look, again, right? I'll give you an example, right? So if you tell us, look, you want to build product XYZ, and let's say it's it's got something to do with computing. You've been coding since the age of 10. We have a lot of kids who now code since the age of 10. You've been, you're ranked on, a bunch of the global coding platforms since you were the age 14. So you're a world-class coder, right? And now you've developed some really deep insight about what developers need. And that is the business you're going to go build. Yes, we absolutely want to hear from you. But, if you're 20 years old, you're third year in university and, you're just enamored by entrepreneurship and you think you want to go launch a company because you read about it in TechCrunch. No. That's not as interesting, right? Because the founder market fit is really not very clear. So founder market fit doesn't necessarily mean that you worked at Gojek or Flipkart or Paytm or Ola or Google, right? But it really has to do with what is the, what is your unique right to win in this space? So I'll give you an interesting example, right? In our next cohort of Surge 4. By the way, there is a question on you applied to Surge, you haven't heard back. That's not good. We should have gotten back to you. Please tell us know the name of the company. We'll get back to you in the next 24 hours. Because we have at this point gone through all applications. We've got thousands of applications. We've gone through all of them. So Alicia, I think we should.
So do drop us the name of the company, because the easiest way for us to look for the company is the name of the company. And then other than that, the other way that you can reach out to us is via our social. So if you have that already, they'll help us a lot if you have the name of the company. Okay, thank you. Got it.
Yeah. So I would say, that's the answer.
All right. Rajan, I think the other question is, is the program conducted in person or will it be conducted remotely?
Yeah, so we used to have an in-person program, right, where we'd spend 1 week a month in a different country. So we launched in Singapore. We spent a month. A month later, then founders went back to their home countries, be it Indonesia, Vietnam, India, Bangalore, Bombay, wherever. A month later, we met in Bangalore for a week. Then they went back. A month later, we met in China for a week. A month later, we met in Silicon Valley. Obviously, with COVID, nobody's going anywhere. So in the last cohort, we took Surge entirely online. Surge 4, which starts in a couple of weeks, is going to be entirely online. And the next cohort of Surge 5, and you should apply, by the way, we've already selected a few companies for Surge 5, which will start in the middle of 2021. Really depends on when the vaccine comes out, how many people are going to get vaccinated, will it be safe to travel, will borders be open? But I must say we've been pleasantly surprised, and in fact we've been amazed at how well Surge Online has gone. Right. In fact, we found that the efficiency of the program is dramatically improved. But obviously we miss the human interaction, right? Because founders are not able to sort of meet each other physically, etc. But we've been amazed to see how well Surge Online has worked. So I can't tell you exactly. Surge 4, which starts in a couple of weeks, is entirely online. But Surge 5, I won't be able to tell you whether it's going to be online or offline. Really depends on how COVID evolves in the early part of 2021.
Great. Great. All right. The next question is around valuation. Is valuation at Surge standard, or is it
No,
going to be
it's
slightly
not.
different depending on the company?
No, it's company dependent. Some programs like Surge have a standard, right? They give you X amount of capital for Y percentage of the company in a convertible note format. We actually have priced rounds. So depending on the company, depending on the progress, depending on how much capital you need to raise, it's a fixed priced round that we will do. So we will invest $1 to $2 million, and we will take a percentage of equity for that amount.
Okay. All right then. I think like the other questions would be, how predatory are the typical cap tables and early stage ecosystem? Has this evolved? What happens if my startup has that sort of predatory quote unquote cap table when I come to Surge?
What does that mean, Alicia? I don't understand the question.
If the cap table, let's say, does not favor the founder, and at the
If the
point
founder, if
does
the, if the
not favor
founder,
investment.
if the founder has been diluted too much, is that the question?
Yes. Yes.
Yeah, I mean, look, at the end of the day, we want to partner with. I mean, look, as founders, you should be careful about diluting too much of your company, right? Too early in the game. I think that is something you should be very careful of, because you should do what's right for the company and for the co-founders, right? It's just not good for the company, right? If let's say if you're by Series A, if founders only have 30% of the company, that's a really bad sign, right? So, but that being said, look, at the end of the day, I'll go back to what do we look for, right? We look for strong founder market fit. We look for large markets, and we'll look for early signs of customer love. And if you really like the team and the business that you're building, then we'll find a way to make it work, right? And usually investors are pretty reasonable, over a period of time. So it's not a non-starter for us, but we do think as founders, you should be very careful of diluting too much of your company, right? So that's why if you're going to raise $100,000-$200,000 and give away 30% of your company, you should be very careful of something like that. Because I know that happens sometimes, because you have to raise the money, and it's hard to find investors. But be careful of that, because what happens that's why one of the reasons we launched Surge, right, is we want to give founders $1 to $2 million, because it gives them enough capital, but not also be not have the founders dilute so much of the company, where they're going to own very small percentage of the company come Series A.
Got it. Okay. On that note, I think a lot of people say that, we care a lot about founder market fit. Can we demonstrate that through senior experts in the domain who are empaneled as advisors in exchange for equity, or does it need to be by the founders themselves?
Yeah, no, it has to be the founders, right? Because your senior advisors and experts aren't going to build a company. I mean, the only folks who are really going to be working 18 hours a day, 7 days a week for the next decade is going to be the founders and the team that you hire full time into that company. So it's good to have, by the way, you should demonstrate that you have advisors, and if you have advisors and experts who add a lot of value, who are very credible, you should do that. But that's not the way. We don't. Founder market fit is not like how many advisors you have and what experts they have. It's not expert market fit. It's founder market fit.
Great. And then a couple more questions. What is the weightage of the references in the application process? How do we take a look at that references that the founder give us?
No, we look, references are important, right? And by the way, we get this question sometimes saying, look, if you've only worked for a year, but now you're starting this company, or let's say you're graduating from university, you've got a great idea. So they don't have to be people that you work for. They could be professors. They could be people who know you. It could be other startup founders who know you well. We do put weightage to the references, right? So for instance, if you don't have references, that's not a good thing. And also, if you have references from people who say they don't really know you very well, that's not a good thing.
I see. That's
These
great.
references have to be real, right? They have to be people who know you very well, who can talk to your strengths, who can talk to things that you've done, who can really talk to, your skill sets and what you've done in the past.
I see. I see. I think somebody asked about the Search 5 applications. Obviously, right now the focus right now is like making sure that Search 4 in the next upcoming weeks it will actually be will evaluate the application for Search 5. Right, Rajan?
Yeah, no, Surge 5. Yeah, thank you for applying to Surge 5. We've just gotten through the thousands of applications that we got for Surge 4, but we will get back to you soon. Don't worry, you will hear back from us soon.
All right. I think like a lot, I think like a lot of people are asking, why are we asking for PowerPoint presentation style, especially for like ideation stage rather than just giving giving a concept, and then how as an investor we perceive startups without any prototype and just concept.
No, again, as I said, right, I think if you're just ideating, Surge is not for you, right? But if you've ideated, you've talked to lots of customers, you've pinpoint, if you've really thought through the product that you want to build, Surge could be for you, right? So as I said, I mean, I walked through, I don't know whether the founder I answered that question already, Alicia, earlier in the session, right?
Yep.
By saying pre-launch companies, what do we really look for?
Mm.
As I said, look, we have a lot of pre-launch companies, right? But those founders are very, very clear, are deeply, deeply insightful about the problem that they're trying to solve, are very clear on the type of approach that they want to talk to solve the problem, what kind of product they want to build. Now, keep in mind, once they launch, they will iterate, right? The product will change and evolve and morph. But they're very, very clear on what they want to build. So I would say if you're in the phase of ideating, maybe Surge is probably not the right, we'd still love to talk to you and sort of see what you're building, but Surge may not be the right time for you. But once you're clear on what you want to build, then absolutely we should talk to you.
All right. I think the other question today is, what if Surge has already invested in a similar startup? Should I still apply?
Well, look, I mean, if it's exactly the same company, right? So let me take an example. So CoLearn is a doubt clearing app in Indonesia, but Doubtnut was the doubt clearing app in India, right? So these two businesses are quite similar. They will evolve in different ways. So for instance, if you're building a doubt clearing app in Thailand, that's okay. But if you're going to build a doubt clearing app in Indonesia, no, we will not invest in that company. Right. So it really depends. You ask this question because keep in mind, we invest across many different countries. We invest across different kinds of business models and so on. So for instance, Zenium is basically a consumer products company, Invisalign of Southeast Asia, right? So if you're trying to build a Zenium identical business to Zenium means from Singapore, focused on Southeast Asia, no. But if you're trying to build a Zenium of India, yeah, maybe, right? Because we don't have a company like that in India.
All right. I think the other question is, if Sequoia has invested in the past in a similar product line or business model or idea, do we make sure that the IP is protected? What is the confidentiality code? Can we make sure that our idea will not be compromised?
No, absolutely. Look, I mean, we are very, very careful about, keeping data that you send to us very confidential, and we won't share it with others, right? But the only other thing, like we have founders who say, sign this NDA with us, right? I mean, look, you're a seed stage company. Your moat is going to be speed and execution, right? And how quickly can you get the product out? How quickly can you iterate? How quickly can you get to product market fit? So I wouldn't worry as much. But from a search standpoint, look, we keep what you send us very, very confidential. The search team looks at it, but that's the only team that actually looks at your applications.
Great. I think the other one is that is a tech co-founder compulsory to apply for Surge?
No, it's not. It's not compulsory, but let's say you're building. It depends on the kind of company, right? So let's say you're building a dev tools company, and you don't have a technical co-founder. That's probably not a good sign, right? But on the other hand, let's say you've launched a direct-to-consumer brand, and brand's doing pretty well. You'd like to get into Search. At this point, you don't have a technical co-founder, but you've got a small engineering team that's executing pretty well. That's okay. It depends on what I'm saying, Alicia, is it depends on the business, right? If it's a deeply technical business and one of the co-founders is not technical, that is a red flag. Whereas if it's a consumer
Yeah.
brand that's selling on Amazon, that's doing well, and also on your own site, and you have a small engineering team, but both pick for, one's a marketing, one's a deep domain expert, the other co-founder is a very, very strong branding focused co-founder. That's okay.
Great. I think like the couple of last questions. Hey, what details or documents should I prep before raising funds? Should I prep like pitch deck? Should I prep projection? Should I come in with a valuation in mind? What should I prepare for that?
I think the first thing you should do is you should watch Peter Kemp's session on your fundraising deck. So Peter Kemp is one of our senior leaders at Surge. He's on the investing team, and Peter's done a whole set of sessions. And maybe, Alicia, what we should do is post on the chat group all the things that the founders might find helpful for you to watch. So the reason I say that is because, look, you should watch that. It's about 45 minutes or an hour, and all the different sub questions that you had in that question, you will get answered by watching Peter's video session.
Sure, Rajan. I'll post it after I ask the next question, just because we're looking at, like, we still have like hundreds of questions, and we have about 31. I think like somebody is asking, like, can you explain a little bit more about the reference size? Are you looking for one from the industry? Are you looking one from the customers, or are you looking for one who can talk a little bit about your work ethic and how you've worked with them or like studied under them in the past?
Yeah, I would say that by the way, there's no right or wrong answer, right? Ideally, but it should be somebody who knows you well, who's either who's worked with you, or let's say, if you've just graduated, somebody who taught you, who can really talk about you, right? Your skills, your knowledge, how hard you work, how well you work with others, how passionate you are about being an entrepreneur. I would say that's probably one. I mean, if you have other, let's say, angel investors on your cap table, it could be an angel investor who, if you've already launched and you're up and running, it could be. I'd say customer referrals may be less interesting. I mean, we will do that anyway, right? If we get into an in-depth evaluation of your company for Surge, we will, and you happen to have customers, we will actually end up talking to your customers. So we will do that anyway.
Okay. Uh, sounds really interesting. Actually, this is quite an interesting question. If Surge places so much emphasis on the founders, why is a decision taken without allowing the founders a chance to pitch their idea in person? Why do we do the application process the way we do it today?
Yeah, I mean, firstly, it's a great question, by the way. We would love to be able to meet several thousand startups, every 6 months. Unfortunately, we have a very small team at Surge, and we just can't do that. So really, the application is a way in which we can figure out which 300, 400, 500 companies we want to meet in person, right? And by the way, for the several hundred that we do, we meet them in person. So that's really the reason to do it. But the other thing is, by the way, founder market fit, you should be able to write about. If you can't write about and articulate why, you and your co-founders, if you have co-founders, have a unique right to win in this market. If you can't write about the unique insights you have about the market that you're serving, the pain points that your customers have, right? Those are all signs for us, right? And you can tell a lot by reading about somebody, right? That obviously, you can tell a lot more by meeting person. That's why, we wouldn't invest in a company and partner with Surge without ever meeting. Meaning without ever having, now we meet virtually, right? We're not meeting in person, but we're meeting virtually. But that's the reason we do it. So put a lot of thought into your write-up, because the write-up does matter a lot.
I see. I think another question would be, can early stage companies looking to raise less than $1 million also be a part of Surge? Or should we look for investments from another source?
Yeah, I mean, look, so Surge, we do invest, million is it's $1 to $2 million from Surge, right? Now, because we have 80% of our companies have co-investors, some of our companies raise more than 2 million, right? They'll raise 1.5 million from us and let's say $1 million from somebody else. We have had a few companies that have raised a lot more than that, right? Which is 2 million from Surge and then a couple of million from others. But below $1 million, I think we wouldn't. But what we'd say is, look, if you're doing something really, really interesting, so let's say you said, look, great founder market fit. We found a giant market. We've got incredible user insights. We don't need to raise $1 million. We only want to raise a couple of $100,000. We would still like to talk to you. You won't be a part of Surge, but we may decide to. We have a bunch of other programs that we have. They're not at the level of Surge and Surge scale, but we'd love to talk to you. But not, it's not. Surge it does have a 1 million minimum investment cutoff, but we'd love to. If you think you meet all the other criteria, but you don't need to raise $1 million, we'd love to talk to you still.
Great, great. All right. I think another question is around recruitment, and specifically around if Surge helps with recruiting for tech talents, especially in markets like Southeast Asia, where tech talent is relatively more scarce. And on top of that, for a non-technical founder who is not yet a part of Surge, how can they attract these like technical talent?
Yeah, no, absolutely. Look, so I'll give you a real example to make it specific. So Telio is the largest B2B e-commerce company in Vietnam, right? And when Surge partnered with Telio, we were fortunate enough to partner with Saifong and his team. They didn't actually have an engineering team, right? So Telio's CTO and first 30 engineers were hired while they were in Surge through the Surge networks, right? So we get very, very hands-on. We get very involved in helping our founders hire. So the short answer is the same, and I can give you many other examples, especially in Southeast Asia, right, where it's much harder to hire engineering teams. So we actually have a network of partners who will help you hire. Obviously being a part of Surge, you number one, you have the capital to be able to hire great engineers. So short answer is yes, absolutely. That is one of the biggest advantages of coming to Surge. Benefits of coming to Surge is actually hiring, not just the fact that we actually are able to help you hire terrific talent.
Great. And with that, unfortunately,
there's a question here on single founders from Danasekar Balakrishnan. Absolutely. Look, so in our last cohort, Nelly, who's the founder of Tiger Hall, is a phenomenal founder. Tiger Hall is an incredible company based out of Singapore. Nelly's a single founder, right? Vivek, who I talked about, who's the founder of Pentester, single founder. So whether you're one founder, whether you're two founders, and on the other hand, we have 5 co-founders, right? Fitter, which is an online fitness company in Pune. We have JC, we have Sonal, and they have 3 other co-founders. So there's 5 co-founders, right? Rukita in Indonesia, we had 4 co-founders. So single co-founder, 2 co-founders, 3 co-founders, 4 co-founders. I think if you had 10 co-founders, we might think a little bit about it, because each co-founder may not have enough equity to go around and to make it worthwhile. But no problem at all with a single co-founder. We think it's better if you have 2 because it'll be easier on you. But we have many examples of single co-founders.
Great. And with that, Rajan, unfortunately, we ran out of time. Thank you so much for submitting. We went through I think about only about 30 or 30 questions maybe today out of the 120, and then plus another 30 more that you guys submitted. So thank you so much for being so active and submitting all those questions. We're going to be running this every single month. So don't worry if you don't get your questions answered today. Next month we'll be able to answer more. And with that, thank you so much for taking your time out of your very busy day to speak with us. And thank you so much to Rajan as well for taking time to chat with us.
Great. Thank you, Alicia, for hosting this. And thanks everyone for coming. I hope, keep building. We're very, very excited about the companies that all of you are building. And if you're interested in Surge, we'd love to hear from you.
All right. Thank you so much, everybody. Thank you. Good night.
Good night.